Maybe you're concerned about this. After the recent bank failures, many are worried about the safety of their own deposits. The local financial instructor Michael Masserant from the Retirement Education Foundation is here to explain how these bank failures could impact your money. Michael, good morning to you.
Good morning.
Thanks for being here again. The first question I have, how and why do these banks fail? Silicon Valley Bank, most notably in the news recently.
So Silicon Valley Bank really was just a risk management problem. And honestly, it's a little shocking how poorly they manage their own risk. So essentially what happened was they made a lot of investments in long-term bonds. The Federal Reserve raised rates. Those bonds lost their value. And their depositors, people who had their cash at Silicon Valley Bank, needed cash back. And Silicon Valley Bank didn't have the cash. And that caused some fear, that caused a bank run, and that caused to a really quick unwinding of what we saw happen over that weekend when it all unwound. Now, what's really interesting is, so Silicon Valley Bank was the second largest bank collapse in the U.S. history so far, and the largest was Washington Mutual back in 07-08. That bank collapse took about 3-ish weeks to happen. Silicon Valley Bank took a weekend.
Wow. Because
now everything's on our phone. The people that cash at that bank were moving money online, digitally. It was gone in like a day.
That's incredible. And now, you know, the talk of, you know, it has recently been purchased, I believe, by First Republic Bank, but, you know, the government stepping in and, really, you know, a bailout for the bank.
Yeah, so there's a lot of talk of, was it a bailout? Was it not a bailout? Should they have let them fail? So a couple of things. So the stockholders of Silicon Valley Bank, people who own stock and the bonds, the stock went to zero. So the stockholders, they lost their money. And that's kind of how it's supposed to work from a capitalistic perspective. Now, there were a lot of people at Silicon Valley Bank. They're a pretty unique bank in that they cater almost exclusively to really high net worth individuals out there in Silicon Valley, tech companies with a lot of cash. And so there are a lot of people saying, well, this is a bailout of the wealthy. And a little bit, that's the truth. There were a lot of people who got their deposits back because they had balances over that $250,000 insured threshold. Now, the challenge with that was, if you don't bail this bank out, a lot of companies have their cash there for payroll, for expenses, for their own insurance. And so if you don't bail these banks out, this particular bank out, and make these companies whole, they can't make their payroll. So anyone working for these companies wasn't getting paid on Friday or wasn't getting paid on Monday. That was the concern. And the second concern there was, if they don't make these depositors whole, that sparks a lot of fear across the country in terms of, is my bank safe? I have a regional bank, should I take my money out? And so the Fed just said, we're not doing that, we're stepping in, everyone's being made whole, and call it a day.
A little bit closer to home, if you're a local business owner in the Detroit area, maybe you got somewhere in the $250,000 to $500,000 range, you're a business owner, you've got all your payroll in there. Should you be worried? Are there things you should be doing right now to protect yourself against another potential bank failure?
So the current threshold for insured deposits is $250,000. And if you're a business owner with payroll, you need a lot of cash on hand, you probably should have 1 or 2 or even maybe 3 banks to spread the cash out to get as much insured coverage as you can. Now, there will probably be some law changes around this, and it's a little silly, candidly, that any individual like myself has the same insured cash limit as a multi-million-dollar business. There should probably be tiers to this so they have a bit more insurance and coverage because they have more cash needs. I don't have a $1 million a week payroll to worry about. Businesses do.
Can I get a loan then?
Yeah.
Hey, Michael, I got about 20 seconds left, and this is longer than a 20-second conversation, but should people be concerned about the U.S. dollar?
So there's been a lot of talk about that, and there's been some international changes going on, but right now the U.S. dollar is still by far the strongest global currency there is.
Stay calm.
Yeah.
Stay calm. That is the moral of the story. Michael Masserant, where can people find you?
RetirementPlanningEDU.org.
RetirementPlanningEDU.org. Love having you in the house. Thanks, buddy.
Of course.
You got it.